Dan Holmes here. Welcome to the Feedzai weekly update. The PSR published their latest consultation paper talking about the future of regulation within the scams or authorized push payment fraud space. And it wasn't a huge surprise to see scams as the topic of this latest focus, given that scams last year alone cost UK banks and consumers over £580 million. And today, scams represent over 70% of all fraud losses reported on the digital and mobile channels. So what does the latest guidance from the PSR recommend? This can be broadly broken down into three things. Number one, mandatory reimbursement for all scam victims. On average today, only 40 to 50% of scam claims are refunded. It gives consumers comfort and protection that they will be refunded if they fall victim to a scam in future. From the bank's perspective, their risk exposure is greatly increased as a result of this change. Number two, the regulation aims to create consistency in terms of what banks are doing to best protect their consumers from scams. Thirdly, and perhaps most significantly, in addition to the 100% refund guarantee, for the first time ever, liability for those losses will be split 50-50 between the sending bank and the beneficiary bank. Traditionally, fraud liability has always sat with the sending bank, therefore fraud prevention measures have typically focused on preventing bad payments leaving customer accounts. This change will now force banks to think not only about payments leaving customer accounts, but payments landing in customers' accounts from an inbound perspective. There's a lot to unpack here from both a technology and a process perspective, so expect to see more about this from the Feedzai team in the coming weeks. In addition to these three key principles, other consultations are also ongoing within the PSR, which could have wider impacts. These include sharing intelligence between banks, regulators encouraging banks to not only share data, but also share best practices on prevention techniques, as well as best practices when it comes to how best to educate consumers of the risk of scams. Secondly, in an unprecedented change, banks will be forced to publish their scam losses into the public domain. This means that consumers will be able to see how effective their bank are at protecting their consumers from scams. And this could have many repercussions in terms of how a customer chooses to interact with that bank going forward. What we don't yet know are the estimated dates of delivery for these changes. However, on or after November 25th, there'll be more details around the principles that I've described available for us to unpack. And it's estimated that the banks will get at least a year to implement these changes and deliver against the guidance. Between now and the deadlines, I'd expect banks and their technology providers to be working closely together, thinking about possible solutions, so when the deadline does come around, they can act swiftly and with conviction. Thank you very much for watching. This has been Dan Holmes with the Feedzai Weekly Update.